What is going on, everybody? Welcome to another video. In this video, I want to go over a couple of stocks. I'm going to say 3 of the best options for covered calls right now. So with that being said, let's go on ahead and get started.
I've been getting dirty money.
Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least 1 video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. So guys, number 1 is, so there's gonna be a couple companies, and these are gonna be companies that are not highly priced. So what that means is 99% of you guys are going to be able to do this. If you have $1,000, or let's say if you have $2,000, you're going to be able to do at least one of these stocks. And what does this mean? It means you're basically going to be able to trade without a lot of risk, and you're going to create more income from you holding your stocks. So first one I want to talk about is AAL. So this one actually is, a lot of people are going to know this company. And again, we want to buy brands and companies that are solid companies. Now, here is a problem with this one. It's been swinging. So ups and downs, obviously that does happen with their business. A lot of companies do go out of business, but American Airlines has been a very solid company for quite a while. So how much do you need? Basically, you're going to need $1,351 according to this right here. So one thing I do want to show here is we are going to pop this up, and basically I'm moving windows around on my computer. So if you don't know, we're going to get rid of this. We're going to pop over here. So where it's at right now is $1,343. So you're actually, so I'm going to say roughly around $1,400 is where you're going to need, and I'm placing that just based off of there. So if you have $1,400, you can sell a covered call on this. Basically what you got to do is you got to buy 100 shares of AAL. Now, why do I like this? I like AAL because not only is it a good company, you're going to be able to create income. And that's where we have this other window up here for the options. So if you go through and you look at this, it gives you the thing. So like right now, if it's March 8th, I'm looking 1 month out exactly. That would be April 8th. And this is going to show me all the options that I have for April 8th. Meaning now, with it being a covered call, is I want to be looking at the left side. You guys can also sell puts against this. So if you think it's gonna go back up and go to $10, sure. And in a bull market, in the whole stock market is skyrocketing, yeah, you probably would. But in this case scenario, we are going to be looking at calls because the market's in a little bit of a situational spot where Ukraine is doing a bunch of things and stuff like that. And we just want to make sure that our investments are going to be okay. And we are basically capping the upside. There is some downside in order to be able to add more shares later, because I do believe American Airlines will bounce back. The government seems to save very big companies. So if I'm going to a call, my number 1 thing that I'm looking for here is going to be probability of in the money. So what we're going to do here is we're going to extend this. I want a very high probability of in the money. So I'm probably going to go with like a 10 to 15% probability of in the money. And what this one's going to do right here is you're going to see, I'm going to end up highlighting it right here, is this one. We're basically going to sell this one. And you're probably going to be able to get the ask out of this one, even though this is aftermarket. Earlier today, this one was like 40-something cents or 50-something cents. So for instance, today, if I would have sold it near the market close, you would have been around 33 cents, 30 cents. So for investing, I want to make sure you guys can all see this. Wrong window. So for investing just a little bit of money, you are going to be able to take this $1,400 and be able to make whatever the upside is of in between. So I just want to make sure we have this 100% correct for everybody. So if you take $1,400, and you're going to be able to do this with every stock, I just want to show you guys here with this one. So 1,400 times, and what was the one that we wanted to sell? That was a $17 or 17 call option. So if this went up to 17, the option or the stock went up to 17, you're going to make the difference between 17 and 13.44, obviously. So you're going to make a good chunk there if it does get executed, which could happen. I don't think it's going to happen, but it could happen right now. Or what you can also do is you can take that $1,400, and I'm going to say it's probably a 3% gain. $42. So I was pretty close. And I think that's what it was today. So you're going to make 3% every single month as long as you keep doing this without hurting this stock. So if it goes to 17, you're going to make the exact difference between 17 minus 13, or actually we'll go with 14, obviously, because that's what we said, worst case scenario here. So you're making $3 a share, you're making $300 even if it does go up, plus you're making the 35 or 40 cents a share that you're selling the option off of as well. So you have to remember that as well. So that's why we're looking at this. So I do want to bring up this other window again. Stocks that you can do this on and do this very, very well. So AAL is one of my favorites right now just because it's so cheap and I like cheap companies. Now I am going to throw one out here that I think is going to be a very, very successful stock in the future. In order to do this, it's going to take a little bit more money, but you're going to be able to do it. Again, Apple is a great one to do if you can have the money and stuff like that. But you have also BAC. Now, a lot of you guys that are in the stock world know of this company, but why is this such a solid investment? It's Bank of America, guys. Bank of America has done very well for a lot of years, and guess who owns it? Bank of America has a stake from Berkshire Hathaway. Berkshire Hathaway, or Warren Buffett, in other words, and Charlie Munger, have quite a bit of money in this one. So again, and you're only at, I'm going to say, $4,000 on this one in order to make that. So this one may be a little bit less, but you're also holding the stock. So again, I want to make sure we come over here and we change things here. So make sure you guys can see this. Bank of America. And we have this stock, and you know, if we're buying it at 38 and 4, so $4,000 worst case scenario at $40, I'm probably going to be looking here. You know, I want to get a little bit, I want to be at least 10%, so I'm looking at $22 a month extra on this one, just because I'm selling this one. Now what I can do is I can collect $100 and something at a 41 strike price, which more than likely could get hit. But if you're bearish and the market continues to go down, you're just going to collect the, what is this, 41. You're going to collect $100 a month by doing this. Now again, if the market is bullish like it normally is, there's an easier way to do this. All you have to go out here is you think it's not going to drop basically $10. You would sell this option right here, the put option, for 25 to 30 bucks, depending on where you get filled at on this one, and you continue to own the shares, and it continues to rise. And that's the great part, is if you do buy it here and the market does continue to rise and we catch this bull wave, eventually you're just going to be able to sell closer and closer to in the money if you want, because no matter what, you make money off of that deal, and that's a great deal that you want to be in. So the third one that, again, I think other people should be looking at. Now, why I say this is going to be a little bit different. Now, I already loaded it up over here. I'm going to show it to you real fast. Google. Now, I made another video here recently about they are splitting 20-1. Guys, this is a big deal, believe it or not. So $25,400 or $2,542 divided by 20 is what you're going to do. So this share is going to become $1,027. So you're looking at $12,000, let's say $12,500 in order to do this. But I'm going to show you the big difference in this stock. Now, of course, these premiums are going to change because of the stock price, but this is a very, very big
stock to play, and it's going to become a lot like Apple. And now, why do I say that? Is because I'm going to show you what Google's like right now, but it's not going to stay the same. So if we go a month out here over on Google, April 8th, you're going to see you have a ton of options here. And if you have 100 shares, you're looking at it going, well, there's no way that this is ever going to hit. And you're going to be able to make very, very easily money, you know, just off the spreads. And you can sell vertical spreads on these as well, guys. This does work. If you guys haven't seen that vertical spread video, go and do it. Vertical spread options, basically a credit spread, is great on Google and Amazon and things like that, as long as you can get filled. I truly love those plays as well. And on SPX. But this one's going to end up being like Apple. So let's go look at Apple really fast. So Apple's at $156. Basically, you're going to need $10,560 in order to buy 100 shares. And I think 100 shares in this one's going to be great. But still, you're going to be able to go out to a call, 5%, and make $50 a month off this. Or you can go over here and sell options, or sell the other options. Now, this one's premiums have slowed down. Obviously, the call premiums are not as good in a down market. But if you go back and look at them in an up market, it's going to be better. If you go to put side's a lot better if you notice it here. You're going to be able to sell 130 strike for anywhere. This is kind of strange here, by the way, guys. A month out seeing this big of a spread between 34 and 147, I'm probably looking more, I'd rather sell a call here anywhere between 25 to 50. And if you look at the last price on here, it was $42. So you're probably getting about $40 for that one. But you're going to be able to buy a quarter of a share for free every single month, and it's consistent. You're going to get consistent income out of this one. And again, I do like Apple. There's a ton of people that buy this one. And I think Google's going to end up in this same area. And that's why I like it so much. So with that being said, guys, thank you guys all for watching this video. I hope this understands. Those are kind of the 3 or 4 stocks that I absolutely like right now for covered calls, and anybody can afford to do them. And again, guys, if you can't even afford the $1,000, you can start with $500. Do vertical spreads, guys. And again, you have a higher probability of ever winning these trades compared to buying a option and then trying to sell it later. Predicting the market. Don't try to predict the market. Just try to make sure that it doesn't hit your strike prices, and you'll be able to be a lot more successful. So with that being said, thank you guys all for watching this video, and I will see you in the next one.